This is Paper Whales, a daily evening financial newsletter by me, Daffy Buck, focusing on high-signal market recaps, technical setups, and no-fluff analysis every trading day. Here's what actually mattered today. VIX, 12.5%. CPI, 4.2%. Someone is very wrong. The market just threw the biggest green party of the month. On the same day, inflation printed at 4.2%. Either the smartest money in the room knows something you don't, or this is the most expensive case of collective denial we've seen this cycle. All right, the tape. Dow up 1.86%, S&M. P up 1.75, NASDAQ ripping 2.54. Bitcoin up 3.5, Ethereum matching it. But the one that actually caught my eye, Solana up 6% on a macro-heavy day when it had absolutely no business doing that. And the VIX, the market's fear gauge, got absolutely body slammed, down 12.5%. That number is the whole story today. We're coming back to it. So here's what happened. Tuesday's CPI print landed at 4.2% year over year on the headline. That is not a typo, that is just uncomfortable. Core was better at 2.9, which gave the Fed doves something to point at, but make no mistake, the conversation on Wall Street has quietly shifted from when do we cut rates to do we need to hike again. That is a completely different world than where we were 6 months ago. Then PPI came in mixed, slightly hot on the headline, softer on core, which basically means both the hawks and the doves got to go home feeling good about themselves at cocktail hour. What it actually means is the inflation pipeline isn't on fire, but it's definitely smelling smoke. And somehow through all of that, the hot CPI, the PPI ambiguity, a Federal Reserve balance sheet release, the market just sprinted through it and painted everything green. The most likely explanation? Institutions used earlier weakness to reload positions. The less comfortable explanation? Someone knows something. Daffy is going with the former. Winner of the day, Oxy, up nearly 4% as Middle East conflict risk sent crude prices higher and oil-leveraged names ran with it. Buffett's still in it. The tape agreed today. Loser of the day, Oracle, down 6% after reporting data center expenses that were just too high for the market's taste. Turns out the AI trade is great until you see the bill. Tonight's prop is XOM, Exxon. The setup is straightforward. Middle East conflict risk has put a genuine geopolitical premium back into crude oil, and Exxon's size and structure make it the cleanest, most institutional way to play that. Entry, $122.50, $124,000. Key level, crude, $85. I'm watching is $122.50 to $124. The key level to watch is crude oil itself, specifically whether it holds above $85 a barrel. That's your confirmation that the geopolitical bid is real and not just a one-day headline trade. The risk you need to respect? A ceasefire announcement or diplomatic resolution over the weekend could unwind this premium overnight, fast. That's the nature of geopolitical trades. They're great until the diplomats show up. Full setup, target levels, stop loss, the whole thing is in tonight's newsletter. Friday, June 12th. Fed speakers plus Oracle hangover. Friday is light on data, which means Fed speakers own the microphone. And if any of them decide to remind the market that 4.2% inflation is still a problem, today's Green Party gets a very rude ending very quickly. Set your alarm for the morning session open and watch how the hyperscalers, Microsoft, Google, handle the Oracle hangover. See you tomorrow for another update. Full Paper Whales issue is live right now. Every section, every source, all 3 prop setups. Subscribe to Paper Whales for free. https://paperwhales.beehive.com. Follow me on X, Twitter, EPS, x.com, DaffyBuck28.